What up YouTube, Jason here. Today we're going to talk about getting started investing at an older age. I was 39 when I got started. We'll get moving on that, and we're going to look at my nearly $2,000 dividend portfolio, whether or not it's doing well, and we're going to check out some upcoming payments. Let's get going. Remember to like, comment, or subscribe. Or do all three. So my 30s went by so fast. They were kind of a blur. I felt like I had all the time in the world, still felt young. Retirement was the last thing on my mind. It's strange to go from I'm young, I have all the time in the world, to I'm fast approaching retirement age and I'm not as young as I used to be. This type of thinking also led me to become overweight. You know, I'm young, I could eat what I want, or I'm young, I have all the time in the world until retirement. After coming to the realization that having fun didn't mean spending all the money you have on anything you wanted or eating all the food you ever wanted without consequence, I began to change my life. I changed my life and I ended up losing 100 pounds. So after losing 100 pounds, I thought, man, if I could do that, something I thought previously impossible, saving for retirement didn't seem like such a big deal. Same principles, right? So I started looking at savings in retirement the same way I looked at losing weight. It's not a sprint, it's a marathon, and it's not impossible. You just have to get started. You got to take that first step. And that's what I did. Not that I have thousands and thousands of dollars invested, but I'm started and that makes me feel better. So like I just said, I don't have thousands invested, but I have zero debt, and I feel like I'm on the right track. There's so many ways of reaching financial independence and overall growing your wealth. 401k, 403b, stocks, bonds, mutual funds, IRAs. And I've decided on utilizing compound interest with dividend investing to make my wealth grow. There are no guarantees when you're investing your money, but if you take a look at high quality blue chip stocks and their history of dividend growth, dividend kings, aristocrats, what have you, it gives me a warm, fuzzy feeling inside. Speaking of inside, let's go inside and go over to Simply Safe Dividends and check out what I mean. So what happens to dividend during recessions and bear markets? Well, what does happen? Are they safe? Dividends have historically been much less volatile than stock prices. After all, if dividend payments are no steadier than stock prices, which often experience sharp and unpredictable swings, then it doesn't make sense to place much faith in dividend-focused income strategy in retirement. Let's look at the chart below here. It plots the S&P 500 dividend growth adjusted for inflation over each rolling 12-month period from 1900 through 2018. All right, so let's see here. We can see here that it shows the percentage of change over each rolling 12-month period from 1900. Okay, so compared to the dividend chart, you can see that stock prices experienced a greater number of swings and tended to move more significantly in either direction. That peak up there and that valley down there. Alrighty. So, okay, so here we go. Here's the dip. Nope, sorry. There we go, 15% of that. Right there, that swing right there, and a dip down there right around 23, 24, 25%, as opposed to the stock price here all the way up to 50%, but then as low as 45%. So simply put, dividend payouts have been much less volatile than stock prices. Oh, that's basically the gist of what I'm trying to say here. Yeah, all right. Let's see what happens to dividends here. Look, it dropped 30%, peak S&P decline, and S&P dividend change 46% in the positive. And that was in World War II. So let's go on the housing. It dropped 57% in the recession, and dividends dropped 23%. So in fact, in 3 of these recessions, dividend paid to investors actually increased, including a 46% jump during the first recession following World War II. All that said, did I start investing too late? Dividends are pretty safe. Yeah, not 100% guaranteed, but they're pretty safe. Let's go ahead and check out my retirement calculator and see what's going on there. Okay, let's go Google retirement calculator. And you can see I've clicked on a couple of them. The one I seem to understand the easiest is the Dave Ramsey. Let's go ahead and put 40 right now, and let's bump that up to 70. And right now I'll just put in close to what my investment portfolio is, 2,000. And I'll continue to try and contribute $500, and we'll just go with the 12%, and that gives us 1.8 million. So no, I don't think I started too late. That number actually makes me happy. It makes me excited. Let's bump that up to 15% and see what it changes it to. 3.6, man, just a couple percentage points, and it's just, wow, almost double. Man, and then my million, so by 2042, we'll have $1 million. That's something to really, man, that gets me so excited. So excited. So let's check out our Robinhood portfolio. Well, basically it looks like everything's down today. Probably has to do with the coronavirus. It's been wreaking havoc on stock prices lately. Let's go ahead and check our dividend payments. The thing I love most about this app is you can go to the calendar and see when you're getting paid. These are my upcoming payments here. Let's see if we have any dividend raises coming up. Dividend changes. Alright, looks like Aflac went up a penny. Ambridge went up 5 cents. That's it for this month. Well, O went up. Okay. Yeah. So anything? Yep, just the 2. That's great. A dividend raise is a raise. All right. Okay guys, I'm gonna head back out, finish my walk. I hope I've demonstrated that starting your retirement investments at 40 isn't too old, and that dividends are fairly safe, as safe as you can get in investing. So anyways, if you like what you saw, subscribe, give me a thumbs up, and let me know in the comments how I did. Take care.